Welcome back to the channel, XRP Army. Today we are answering the billion-dollar question that is flooding the internet. Is the XRP ETF approved? And if so, where is the price explosion? If you are looking at your portfolio and feeling confused because the price hasn't hit $10 yet despite the massive news, you need to watch this video until the very end. We are going to expose the institutional game plan that is playing out right in front of our eyes. The headlines in late 2025 confirmed what we fought for. The Bitwise XRP ETF, the Canary ETF, and others are live. They are trading on the NYSE and NASDAQ right now. But here's the kicker. The price didn't teleport to the moon overnight. Why? In this deep dive, we are going to break down the accumulation disconnect, why the real explosion is mathematically guaranteed to happen in 2026, and the data that proves the whales are buying while retail is selling. First, let's look at the facts. In November 2025, history was made. The SEC officially waved the green flag for spot XRP ETFs. We saw Canary ticker XRPC, and Bitwise, ticker XRP, launch with record-breaking volume. This was the validation event we waited a decade for. It confirmed once and for all that XRP is a non-security in the eyes of the most powerful regulators on Earth. But markets are strange beasts. Often when a massive event happens, we see a sell the news event. The day traders took their 20% profits and left. But the institutions, they just started their engines. The data from January 2026 shows that despite the flat price action, the assets under management, AUM, for these ETFs are climbing steadily. This means BlackRock, Fidelity, and the other giants are slowly, quietly sucking up the liquid supply of XRP. They don't want the price to spike yet. They want to fill their bags at $2.00, not 20 zeros. We need to talk about the supply shock mechanics. This is not hype. This is economics. When you buy an ETF share, the issuer, like Bitwise, is legally required to buy real XRP and lock it in a cold vault. That XRP is taken out of circulation. It cannot be sold on Binance. It cannot be used for ODL. It is effectively burned from the tradable supply. Right now, millions of XRP are moving from weak hands, retail investors bored by the price action, to strong hands, ETF custodians. We are approaching a tipping point where the available float on exchanges will hit critical lows. When that happens and a sudden surge of demand comes in, maybe from a new bank partnership or a favorable macro event, there will be no sellers left. That is when you get the God candle. That is when the price gaps up 50% in a single hour. This is the explosion we are waiting for. Furthermore, let's discuss the grayscale effect. We have seen Grayscale converting its trust into ETFs. This unlocks massive liquidity. In the early days of 2026, we saw some outflows from Grayscale as long-term holders finally cashed out. This created selling pressure that suppressed the price. But the data suggests this selling pressure is exhausted. The paper hands are gone. Who is left? The diamond hands, the believers, and the new institutional buyers who are allocating 1% to 5% of their portfolios to crypto. With the sell pressure drying up and the buy pressure from the ETFs constant, the laws of physics dictate that the price must follow the path of least resistance, up. We also have to address the psychology of the market. It feels boring right now, doesn't it? XRP is hovering around the 190. 2.0 range. It feels like it's stuck. This boredom is a weapon. Market makers use boredom to get you to sell. They know that if they keep the price flat long enough, you will give up and move to a meme coin. Don't fall for it. The smartest money in the world is buying right now. Do you think they are buying to lose money? No. They are buying because they see the roadmap. They see the ETF inflows. They see the global adoption. They are positioning themselves for the next leg up, which analysts predict will target the $4 to $5 range in the short term as the ETF impact fully kicks in. Now, let's pivot to the bigger picture, the institutional Trojan horse. The ETF was never the end goal. It was the entry ticket. Now that banks and hedge funds have a regulated way to touch XRP, they can start building financial products on top of it. We are hearing rumors of XRP-based lending and yield products being developed by major Wall Street firms. Imagine a world where you can use your XRP ETF shares as collateral to get a loan to buy a house. This locks up the supply even further. The ETF allows XRP to be integrated into the plumbing of the traditional financial system, TradFi. It becomes collateral. It becomes a treasury asset. This transition from speculative coin to accepted financial collateral is the repricing event we are currently living through. Let's look at the macro environment in 2026. Interest rates are stabilizing and global liquidity is expanding. When liquidity expands, it flows into high-growth assets. With the ETF stamp of approval, XRP is now considered a safe high-growth asset by conservative investors. Pension funds, which control trillions of dollars, can now legally invest in XRP. Even if they allocate just 0.1% of their funds, the inflow would be larger than the entire market cap of most coins. We are already seeing the unit bias effect. Investors look at Bitcoin at 100K plus and think it's too expensive. They look at XRP at $2 and think it's cheap. The ETF makes it easy for them to act on that thought. This retail psychology, combined with institutional access, is a potent mix for a price explosion. We also need to discuss the Bitwise and Canary strategy. These firms are not just sitting on their hands, they are actively marketing these ETFs. We are seeing commercials on financial news networks. They are educating financial advisors on why XRP is valuable. The payments utility, the speed, the scalability. As more financial advisors get comfortable with the narrative, they will start putting their clients into these funds. This is a slow burn, but it is relentless. It is not a one-day pump, it is a structural shift in demand. Every day, more advisors are learning about the bridge currency of the world, and every day the buy pressure builds. However, a word of caution on ETF flows. You will see days where the ETFs have outflows. The media will scream XRP is dead because of one red day. Ignore them. Outflows are normal. Traders take profits. Rebalancing happens. You need to look at the net trend. The trend since November 2025 has been overwhelmingly positive. Billions have flowed in. A few million flowing out on a Tuesday doesn't change the trajectory. You have to have the stomach to handle the data, not just the headlines. The trend is your friend, and the trend is accumulation. Let's talk about the competition. What about Solana? What about Cardano? Yes, they might get ETFs too, but XRP has a unique value proposition. It is the only one with a clear legal status confirmed by a court ruling and now validated by an ETF launch that is specifically focused on payments. It is not competing to be a decentralized computer. It is competing to be money. In a volatile world, money is the killer app. The ETF cements XRP's status as the premier utility asset for the financial sector. This differentiation is key. Wall Street likes moats, and XRP has the widest regulatory moat in the industry. So what does this mean for the price? I am not a financial advisor, and nobody has a crystal ball, but if we look at the multiples that gold experienced after its ETF and what Bitcoin experienced after its ETF, the math is exciting. A conservative estimate suggests that once the supply shock truly hits the exchanges, likely in mid to late 2026, we could see a rapid repricing to previous all-time highs and beyond. The 3.0 to 5.0 range is a very realistic target for this cycle based on institutional flows alone. If we get a black swan event like a major central bank adoption, the double-digit targets become plausible. But we don't need moon math to make money here. We just need the supply crunch to do its work. This brings us to your strategy. How do you play this? The smart money is doing one thing: dollar cost averaging, DCA. They are not going all in on green days. They are buying the red days. They are accumulating while the market is boring. If you are sitting on the sidelines waiting for confirmation, you are going to miss the move. The ETF approval was the confirmation. The trading is the confirmation. By the time the price hits fives, the opportunity for life-changing gains is gone. The time to act is when the crowd is asleep. Security reminder: with ETFs live, you have two choices. You can buy the ETF ticker XRPC, XRP, EZRP in your brokerage account, which is safe and easy but means you don't hold the keys. Or you can buy real XRP and hold it in self-custody. Both are valid strategies in 2026, but never ever leave your crypto on an unregulated exchange. And be aware of the giveaway scams. With the ETF news hype, scammers are everywhere. Ripple is not giving away ETH or XRP. Brad Garlinghouse is not asking for your money. Stay vigilant. The bottom line is this: the dam has broken, the water is flowing. It hasn't turned into a flood yet, but the water level is rising. The ETF approval was the signal. The price explosion is the result. There is always a lag between the signal and the result. We are living in that lag time. This is the accumulation zone. Do not let boredom steal your financial future. Thank you so much for tuning in. I hope this video cleared up the confusion around the ETF approval and the price action. We are witnessing history. If you found value in this update, please smash that like button. It helps us reach more people with the truth. Subscribe and turn on notifications because as soon as the next big inflow number drops, I will be here to break it down. Stay strong, stay patient, and I will see you on the moon. Peace.